9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We are counting down to the open of markets in Greater China. Our top stories today, stocks across the Asia-Pacific bouncing. That's after President Trump backs down on his Europe tariff threats, touting this framework of a deal on Greenland, but he's warning Europe to give up control of the territory or face consequences.
South Korea's equity benchmark crosses the 5,000 target that's set by President Lee as AI demand powers the tech-heavy market.
AI-driven gains also boosting Chinese shares, with Beijing's push for tech self-reliance outweighing geopolitical worries.
Plus, more big interviews coming out from Davos, including White House economic advisor Kevin Hassett and the CEOs of BHP, Mizuho Financial, and the Hong Kong Exchange.
It is indeed a good morning. You give markets an inch, they'll take more. This window of opportunity that's opened up, and we'll talk really more about the tone coming through out of the U.S. president overnight that has allowed markets and risk assets, generally speaking, to rebound. And a lot of this also has to do with the fact that some of the favorites, even before the speech began, are leading the rally. And you are also getting some earnings coming through along those themes to boost things, right? So you have Disco is a good example of that intersection between AI and some fundamental stories there. The Kospi index we've talked about, this was above 5,000. As you can see, we're slightly below that threshold as we speak. That is just to say, of course, we've been hitting milestone after milestone on that. We'll have more out of Seoul in a moment. What's happening across assets is because we are getting risk assets pulling up today, the likes of gold, which are still trading fairly elevated on your screens, are seeing somewhat of a pullback today. Separately, though, gas futures, given the weather out there, whether that's you're looking at a contract in the U.S. or that's with this massive spurt in prices over in Europe, want to watch as we go into the thick of Thursday. The currency markets are one where it is a dollar bounce that is extending despite the gauge itself, bottom of the screens there. So from this time yesterday, we are trading at slightly higher levels, which takes us into really the Aussie dollar, which, we had the jobs numbers, I believe, and we also have, of course, that trading at the highest so far this year. It takes us into the fix today, which has been on the weaker side of 7, and the difference between the fix and spot has actually been widening. It's now the widest since 2023. So we'll look at that. And, of course, the 7-year auction yesterday actually drew record demand. That's why we're also looking at the CGB space. We are poised to see an equity market rally here today in the greater Chinese market.
Yeah, interesting that Chinese bonds have kind of turned into that haven amidst all that volatility you're seeing in global bond markets, JGBs, and the like. So that certainly is interesting what we're seeing when it comes to CGBs. But let's talk about the Kospi, right? Yeah. It's instantly become our top story here this morning. In focus after, of course, the benchmark topped the 5,000 mark. Let's get to Yogyun Lee, our Asia equities reporter. She's with us here right now. Obviously, this has been a political milestone for the president as well, but walk us through, what are the analysts saying? Is there more upside from here?
Yeah, this is definitely a very significant political milestone for President Lee Jae-myung, who's been campaigning on his election pledge that he will help Kospi reach 5,000 if he's elected. And now it seems like he has delivered. And when I spoke to market participants this morning, a lot of them said actually the Kospi 5,000 level is not exactly expensive. And there are many bullish views that Kospi would actually reach above 5,000, even to 6,000. We just spoke to the Korea Exchange CEO forecasting Kospi can go to 6,000. There were another portfolio manager that Kospi, with this tailwinds from the artificial intelligence, memory price hikes, Kospi would definitely get to the 6,000 level in just like about 2 months. This is a consensus that the Kospi 5,000 level isn't exactly an expensive level. If you look at the price to earnings ratio of the emerging markets, Kospi is still below that average emerging markets price to earnings ratio of 1.6. So it could be a little bit of stretch to say that the current level is expensive. So I think that's definitely the consensus view in the market, that Kospi has more to go.
Yeah, that's a good point. People seem to forget it wasn't too long ago, you had this Korea discount, right? And we're just moving out of that, normalizing things. If that's not the risk, We had a softer GDP print this morning. Could that be one? If that's not the risk, what is the risk of this rally, Yukion?
Yeah, so the Kospi being cheap doesn't mean it's without any risk. One of the risks that investors point out is that the limited buyer pool. Interestingly, a lot of investors have been sitting out on this Kospi rally, including the retail investors, and foreign buying hasn't been really strong. It's mainly local institutional investors that have been pulling Kospi up to this level. So the limited buyer pool is something that could be a potential risk to the market. And another is this market breadth has been pretty narrow to Kospi. If you look at the Kospi, the two chip makers and maybe Hyundai Motor have been mainly heavy lifting the gains in the Kospi's rally, accounting for more than half of this rally this year. So the very narrow market breadth and the limited gains in the smaller and mid-sized cap has been definitely a concern. Having said that, some of the investors still see bright spots in this limited buyer pool, because that means that if there's more reactions from the investor that previously have not participated, that could mean further upside to the market. And we've seen this morning that retail investors have been piling in this morning and pushing the Kospi above 5,000 level earlier.
Fantastic. Our equities reporter, Yukion Lee, there in Seoul for us. That's really part and parcel of the big stories today, the AI rally that's taking place. Not just there. We look at Taiwan opening up. There's a separate story here in Hong Kong and up in mainland China. And, of course, separately, disco, of course, in Japan is dancing to the upside, if you get the reference. But, yes.
It's a party.
It's a party, isn't it? What else is on your mind?
I mean, it's interesting how quickly has changed. I mean, I think there's a bit of that whole taco trade that's been playing out here, just given the Greenland headlines, right? The fact that the EU and the U.S. have avoided even the possibility of tariffs, and they're talking about some sort of framework deal. That was enough to kind of send a bit of reversal and snap out of 3 days of losses. So that certainly is one thing to watch here on what sort of deal was actually agreed upon. What framework are we talking about when it comes to Greenland? Yeah,
it doesn't seem like we are long on the details in that one. We were long on topics around the speech. But separately, right, it still highlights the divisions between Europe and, some of the gaps that they need to plug to get somewhere, right? Because separately, we'll talk about this later, Madame Lagarde snuck out of this dinner, and we'll try to understand the context of why that was the case. But yes, here you go with this productive meeting that the U.S. President talked about here, that in some ways means no tariffs, but a framework is perhaps more important. Separately, just to mention, the fix is going to be out in about 8 minutes. I'm watching that closely because we have so far been above 7. And what's happened was because of the strength in the currency, the fix and the currency itself are now the widest spot onshore since 2023. So something to watch, I guess.
Yep. Let's hear more from what we heard from President Trump, right? He had a lot to say in Davos about the deal on Greenland and why he wants the U.S. control of the island.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security. Well, the deal is going to be put out pretty soon, and we'll see. It's right now a little bit in progress, but pretty far along. It gets us everything we needed to get. It's the ultimate long-term deal, and I think it puts everybody in a really good position, especially as it pertains to security and minerals and everything else. We probably won't get anything unless I decide to use excessive strength and force where we would be, frankly, unstoppable. But I won't do that. Okay? Now everyone's saying, oh, good. That's probably the biggest statement I made, because people thought I would use force. I don't have to use force. I don't want to use force. I won't use force. I want Greenland for security. I don't want it for anything else. We have so much rare earth. We don't know what to do with it. We don't need it for anything else. And in terms of Greenland, you have to go 25 feet down through ice to get it. It's not something that a lot of people are going to do or want to do. No, this is security we're talking about. You can say yes, and we will be very appreciative, or you can say no, and we will remember. A strong and secure America means a strong NATO.
Rosalind Matheson, our chief Asia correspondent, is joining us right now to just help us cut through some of the, I guess, in some ways, inconsistencies there. But there was a message, Roz, that markets took from this, and it was one where we're certainly in a much better position now from a tariffs perspective than we were 24 hours ago. What do we know about this framework?
Well, that's right. So markets are looking at this in a positive fashion, but this announcement is very much reminiscent of the way that Donald Trump looks at trade. So we get announcement there's going to be some kind of broad framework understanding, very light on the details. So there's very little that we know. He says this is a framework towards the concept of a deal, but he wasn't going to share what that might look like. But what we do know is he's taken the threat of tariffs off the table. He's taken the threat, for now at least, of military action against Greenland off the table. So what might be left? Well, probably bulking up US security forces on Greenland, bigger bases, more land potentially that is territorially considered the US or under US control, at least in Greenland. So a bigger military presence, despite what he was saying about what he calls rare earths in Greenland, they're really critical minerals. That's probably part of a deal, is some understanding around access to the critical minerals that are in Greenland. So an economic element to this, a security element to this. But the idea of buying Greenland at least seems to be fading, at least for now. But very light on the detail, and we'll have to see what emerges in the coming weeks and really what kind of conversations are going to happen, because it doesn't sound necessarily as though he's been talking directly with Denmark about this deal. So there's a lot that's still in the land of Donald Trump unknown.
And Roz, it sounds like at least that the temperature has been brought down in Davos. But then again, you hear reports of, Madame Lagarde from the ECB walking out during Howard Lutnick's speech. And what does it tell you about where transatlantic relations stand at the moment?
We had Donald Trump saying just now, like, for example, if you say no to us, we'll remember. Well, Europe is going to remember what's been happening over the past year in the second term of the Trump presidency. So they started out thinking, well, let's just flatter him a lot. Let's try not to anger him and see if that gets us through. They've started to get stronger on trade. And now a real moment of confrontation in a way for Europe and all its leaders is to say, well, fundamentally, is the US a reliable partner, a country we can trust within NATO, on trade, defence, you name it? And a real awakening in a way, perhaps for Europe, that they have to accept it's a different world that they're coming into, and the relationship with the US is fundamentally changing. Yes, the threat of tariffs over Greenland has been dissipated, at least for now, but there are a lot of other things that are problematic in the transatlantic relationship, and a lot that's going on around trade. Again, the trade deals in the freezer, really, from the European perspective, at least for now. They're not going to rush to ratify the trade deal. There's still the threat of tariffs on the French over French wine for Emmanuel Macron's refusal to join Trump's Board of Peace, for example. So there is a fundamental shift in the relationship that's going on. They'll be relieved that they've dodged a bullet, at least for now, on these tariffs. But underneath, as you were saying at Davos, the mood is still pretty grim.
Rosalind, thank you. Rosalind Matheson there, our chief Asia correspondent there on the latest when it comes to Greenland. Of course, subscribers can also turn to your terminal for more from Davos. T-Live Go is your function for the latest updates, plus commentary and analysis from our team of expert editors.
Yep, just ahead here, we're talking about these Chinese markets. So Goldman Sachs at the start of the year had a 20% target in terms of price returns on one specific Chinese benchmark. We'll have more, of course, of them unpacking that call coming through this slower bull markets with Si Fu. Coming up next, counting down to the open of trade, including, we should be getting the fix as well any time now, Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. Good morning. Good morning. Welcome back. You're watching The China Show. The midpoint of the day is just out, and it's once again above on the weaker side of 7. In fact, it was weaker compared to this time yesterday, ever so slightly. But yes, it's a similar signal. The market's taken this as a signal coming through of perhaps authorities leaning against the weakness, against the strength, rather, of the currency. More on this, of course, later on. Separately, of course, what we're seeing is a rally in tech, both sides of the Pacific. You had some tech gainers in the U.S. coming up on your screens. It's really this onshoring conversation that's taking place. So you have Intel, for example, that's year to date 50%. Separately, same story, but perhaps down to somewhat separate drivers here. The onshoring and the sort of upgrading the AI infrastructure in China is also still played out, of course, year to date. Substantial. You wouldn't think, looking at this, we are barely through January, but yes, here we are looking at this dual tech rally.
Yeah, because you take a look at what happened even just recently, right? The pullback that you're seeing across global stocks, given the Greenland issue, Chinese stocks, at least the small caps, continue to actually outperform in a way that, it might be going beyond just the fact that it's a safe haven, right? This whole self-sufficiency theme, you're definitely seeing that play out, not just in the U.S., but also China as well.
I think we're breaking out, right, on some of the smaller benchmarks there.
Yeah.
I think we have the Chinex index, the Star 50, I think is a good example, something we're tracking, of course, going into today. Okay, a couple of other things we're tracking, the agenda. Oh, here we go. Thank you so much. We're eyeing this breakout, more than a bad case of acne in this case. Okay, so we talked about the CNY fix that's already out. Lithium is in focus today after what's really been a crazy rally, and of course they've had to halt trading, I believe, and I think we'll talk more about this later. Pop Mart, more threads along the same lines, was out with earnings. A narrower loss is what we're expecting. Pop Mart also delivered another day of a buyback, and of course we talked about this already. Onshore and hardware, that rally is still certainly something to consider going into today. Very big move yesterday on the CSI 300. IT index up about 3%.
Yep, there's also a listing debut here, Longcheer Tech as well here today to watch out for as well. But yes, it's interesting. Goldman Sachs really kicking off the year still on a very positive note here with a target of 100 for MSCI China for this year with earnings supported by AI and policy measures. Let's bring in their China portfolio strategist, Si Fu. She joins us here. Happy New Year.
Happy New Year.
Things have really kicked off in a very positive way in China. What do you think is going to be, tech certainly, we talked about the hardware side of things, remains to be a key driver of all that. How are you viewing the rest of the IT space here right now for the rest of the year?
Yeah, if we look at IT, basically the AI-related supply chain, along the whole industry, we see great demand from the downstream to the upstream. So a lot of companies are guiding double-digit revenue growth with capacity expansion. They are hiring new people. Actually, I joined a tour held by our tech analyst and visit close to 20 companies onshore in Beijing, in Shanghai. Actually, the companies are guiding quite a positive demand. So some companies are hiring new people, building new factories, all because of the AI-related demand. So that's why we upgrade our tech hardware sector view from market weight to overweight, mainly because AI is still driving the growth in the related sectors.
Is that the best way to ride the AI wave in China now? Is it hardware? Because last year some of the other ways were materials or the platform companies.
Yeah.
This is more the pure play now, in your view?
Techware, definitely we have higher visibility because the capex has been spent by the downstream sectors and as well as the government.
Okay.
So basically for the hardware companies like the equipment ones, the chip ones, they've already seen the order. So that's why they expanded their capacity. So on that part, definitely we are expecting some revenue growth within 2026 or 27. For the downstream, the key question is the monetization. We have already seen a lot of companies adopting different apps. We're using different models to launch into their daily work. But whether it can be monetized, whether they can transfer into revenue, is still a question mark. So that's why a lot of people focus more on the upper stream. But finally, we think the downstream will also benefit from the productivity improvements.
There's the hardware side, the AI supply chain, and then there's the other side of the tech story where you are seeing the likes of PDD, TRIP, where there's more regulatory scrutiny around pricing strategies.
Yeah.
And really you're seeing regulators tackle the whole domestic competition issue. Do you think that's a positive thing for these stocks?
I think it's from different angles. For competition, definitely the anti-involution efforts is positive to the company, especially on their margins. Basically, the regulators guide them to stop competing on price. So that means in terms of margin, it's helpful for these companies. But on the other hand, we do see they do not want them to use the pricing advantage to really hurt the customers. So on that front, so far, I think the concern is more company specific. I don't think investors are too concerned about the whole sector. Overall, our policy score suggesting that the policy on private economy is still encouraging. So we are not too concerned about the regulatory tightening, but it's more like a specific company risk.
Okay, yeah, that's the Goldman Sachs POE regulation proxy, if I'm not mistaken. Okay, we'll have more from Si Fu in a moment. She'll be rejoining us at about the open today. Out of Goldman Sachs. Hang Seng Index, A50 futures, of course, that record demand coming through in the 7-year auction yesterday. Something to consider. Still on the weaker side of 7 as far as the fix is concerned. Plenty more ahead. This is the China Show. Right, welcome back. Hang Seng Index in the early goings. Yeah, it's looking like the Hong Kong is going to join this bounce we're seeing across the region. Tech specifically, 0.9% of Hang Seng Tech, and we are slightly stronger from the cutoff, that is, on the Chinese currency. A couple of stocks we're tracking today. One was something we were already watching yesterday, in fact, PopMart, given the buyback there that we now know that they, again, did on Wednesday here.
Yep, that's another one to watch as well. That's seeing a little slightly pop of the shares to the upside here. CSS, they're seeking a $2.3 billion Hong Kong dollar convertible bond. And also New World, there's been reports that they've said to seek an asset sale by June. Chow Tai Fook, also third quarter retail sales actually look pretty good. We're up about close to 18%. On the flip side, though, we're watching a listing debut here in Hong Kong. This is Shanghai Longcheer Technology. This is a telco based, of course, in Shanghai. It's going to debut here after, a 1.6 billion Hong Kong dollar IPO. Prices are priced at around $31 there. So there you go. You're seeing 13% upside in the pre-market here. Bringing those live pictures from the Hong Kong Exchange coming up. This is Bloomberg. All right, another day, another gong banging, I guess you could say, at the Hong Kong Exchange. We're talking about Shanghai Longcheer. So cheers for them.
Yeah.
You can go long on your cheers today for the company. This is, of course, one of China's telco firms that have listed in the past year as well. Interesting enough, out of the 3 that actually have IPO'd over the last year, 2 are now still trading above their IPO price, and the average offer at the first open of those IPOs is about 15%. So certainly there is maybe some interest, of course, in the whole telco sector. So there you go. That's one thing to watch here today. Along with that, of course, you have this sort of backtrack from President Trump when it comes to Greenland. I think that was enough to send a tailwind across risk assets and equities here today. So that should be good for overall Greater China.
Yeah, we have a framework, not a lot of details to share at the moment. That was enough, to Yvonne's point. What would surprise me, though, with the ceremony that's taking place, if Bonnie Chan was actually there, because we know where she is.
She probably couldn't make this one.
Yeah.
It's a faraway trip from Davos.
Yes. Well, we'll see how quick that plane, if any. But yeah, she is. Well, she was in Davos. She did an interview with us. We'll play that out later on because she talked about specifically that she is still very confident in terms of the pipeline. Goldman Sachs will be rejoining us in a couple of minutes. They are also quite optimistic around the IPO pipeline. In fact, they have a very big number to tell you about in about a moment. But yes, 3 cheers for...
Long cheers.
There we go.
Yeah, if you're going long on cheers.
That
should be everyone's life motto, right? Love the name. There you go. 13% pop there when it comes to the telco company here today. The rest of the market is doing this year. And there you go. Up arrow story when it comes to onshore. And really, you look at the main benchmarks, but really where we've seen this rally is the Star 50, is the Chinex, which we'll continue to track here. The small caps continue to have kind of the outperformance there. And you're seeing basically a sea of green across commodities, bonds, as well as stocks in the large caps here this morning as well. Keep in mind, we talked about that 7-year bond auction that came out yesterday out of China. Record demand, right? So there still is, I guess, a bit of demand and interest in the course bond market. Could that be sort of a safe haven alternative sort of play there, given the volatility we've seen with JGBs, the treasury markets, and the like? So there you go. There's that. We'll talk about lithium in just a bit here. But yes, there was quite a bit of volatility. We're kind of upper we're up, a limit up yesterday on some of the futures. It looks like regulators have stepped in to kind of widen a bit the trading range of lithium futures, just given the volatility as well. So that's one thing to watch there today. In terms of what the Hong Kong picture is looking like, obviously we talked about, the pipeline of IPOs and the like with Bonnie Chan. HS Tech is up 0.8%. No surprises really, just given what you're seeing when it comes to the IT, sort of what you're seeing in terms of the AI plays here this morning. They seem to be the key beneficiaries, of course, of this kind of the geopolitical tensions that are easing over Greenland and the US and the EU. So we've basically in some ways avoided the whole tariff discussions, and now they're talking about a framework deal. So that's good enough to see Alibaba up 1.5%. Baidu's up 3.5% here today. So certainly it was interesting too, Alibaba partnering with the nuclear sort of companies here yesterday.
How do you power this thing?
That news certainly sent the stock also shooting higher yesterday here on...
It still is.
Yeah, it still is. We're at 1.5% the upside. So it's all part of how to power the whole AI story, these partnerships that you're seeing with Meta and the like. Alibaba is following suit here. The fix today was quite interesting. I mean, it's still holding around 7, but as Dave mentioned, you're seeing a widening gap between the spot price and really where these fixings are. Perhaps that could be a pattern to come, according to Mark Cranfield from our MLive blog here this morning as well. Let's take a look at how the IT hardware side is looking like. This is really where you're seeing continuous gains here, right?
Goodness. What's going on there?
For Long Sun Technology, Montage Tech alike. So once again, you are seeing a preference for the A-share market and some of these very homegrown names and this whole self-sufficiency theme. You talk to analysts, they say this goes beyond just optimism around the hike in memory chip prices, right? Yeah. There might be some sort of homegrown advantage, self-sufficiency theme that's playing out here. You're not just seeing it in China, right? We talked about in the U.S. as well. Intel, what we're going to hear later on, could be quite telling for the U.S. side of things as well. Precious metals, so obviously just given the geopolitics and the tensions that are simmering, potentially that means coming off when it comes to gold prices. Then there you are. It's just a slight coming off, right, when it comes to gold. We're going to talk to Trang here coming up from LGT. She says, look, there's still reasons for this gold rally to continue, and she'll talk about what's really kind of keeping it. Part of it, they say, is the scarcity of uncorrelated assets. That could be reasons why we're seeing a structural buy around gold here right now. But then again, today, some of the miners are selling off.
You know what's also scarce and uncorrelated? My dirty socks. That's uncorrelated to anything. Yeah, but just using that and extrapolating it to everything else, my socks should be much more. But I guess that's down to the preference of other people. But I can guarantee you, the price of my dirty socks has nothing to do with anything that's going on globally.
Don't even know why you brought it up.
We'll get into the nuance, really, of the broader call on. It's not a search for everything uncorrelated, I guess, is the point.
I see.
We've been stuck in a range since October on the Hang Seng Index, to the point Yvonne was making, right? It's the other benchmarks that are hitting or about to hit new highs on the small caps index and some of the ones onshore. Let's talk about southbound flows and use that as a starting off point for our second segment with Si Fu. She's still here with us, China portfolio strategist at Goldman Sachs. I saw you grinning when you looked at the IT hardware rally taking place. We talked about it already. But so where does it leave Hong Kong, which I think when you look at Hang Seng Index, we're stuck in a range. Hang Seng China, Hang Seng Tech haven't even tested the October high. So what happens? What's the outlook?
Yeah. Definitely, we are also optimistic about Hong Kong's performance. Southbound has been one of the largest inflows to the market. Last year, we had $180 billion, which was a record high. In 2024, we have 100. So it's almost doubled. In 2026, we forecast 200 billion. It's going to be even stronger because for domestically, the insurance companies are encouraged to raise their equity allocation. That's what we estimate that around 1 trillion RMB was allocated both in the onshore and the offshore market, but they are flexible in terms of trading A shares or H shares. Last year, we saw strong inflows to high dividend yield stocks in Hong Kong, also some internet stocks, which benefit from this part of buying. But besides that, we also think the new IPOs will encourage more investors to come to Hong Kong because of the new opportunities, especially around the tech supply chain, and also more growth opportunities in Hong Kong, will definitely attract both southbound as well as global investors. If we look at the IPO participation, some global pension funds, long-only funds are also participating. We see 1/4 of the IPO capital raise was subscribed by the foreign cornerstone investors. It is much higher than previous years. So a lot of long-only investors who haven't invested in China over the past 2 to 3 years, some of them are coming back.
What do you make of what we're seeing in the small caps then? I mean, is that taking some of the attention away from Hong Kong in some ways, given some of these IT names where we talked about, right? They're not familiar names, but they're getting a lot of attention now because of the crazy moves that we've been seeing there.
I think we have different pools of capital. Domestically, we have the retail investors as well. We also see a huge potential there. Our estimation is we think domestic investors could allocate like 3 trillion RMB into equity market annually. Based on historical record, if we look at how many new accounts were opened every year and how much money like they raise through the margin trading, we estimate it's already around 2 trillion, even in a normal year on average. If sentiment is picking up, definitely there's huger potential coming from the domestic like deposit. It's around 200 trillion RMB in deposit, in wealth management products. For Chinese household, the equity allocation is still too low, around 10% only, compared with like DM, EM, other EM countries, it's around 20, some high could be 50%. So that's a huge potential. For small caps, we do see more retail participation. So there could be fund coming from there.
It really begs, so this time last year we were talking about this mountain of built-up savings that we were looking at. Oh, that's going to go somewhere at some point, right? That's the powder keg that goes into the equity market. The other part of the equity market that's, if you look at big numbers, is the IPO market. And I'm wondering, where's all that money coming from, right? So how much do you think they're going to raise this year in the IPO market? And who's going to fund that? Because everything else is being funded somewhere else by somewhere else.
For this year, we focus $100 billion for both A and H shares. It's not a huge number. It's 0.5% of the total market cap.
Well, if you compare it to market cap, it's not,
but in terms of this ratio, it's the 5-year average.
Okay.
Why we feel it's large? Because over the past 3 years, the number was too low. So it's kind of a recovery from a very depressed level. And that also gives us the potential for new capital to participate, because over the past 3 years, we saw a lot of global long-only money have moved out of China market. So a lot of them have very low allocation in China, but they are looking for diversification opportunities, given the U.S. market, the valuation is already high. They have huge allocation in the U.S. market. So a lot of them are looking for new markets to diversify their portfolio. And the new IPOs, especially AI-related ones in China, definitely give them more opportunities. So we did see some money coming back. In 2025, if we look at all the IPOs, like 1/4 was subscribed by the foreign cornerstone investors. Another 17% was subscribed by domestic cornerstone investors. So a lot of long-term investors are willing to participate in the recent IPO, including like some high net worth individuals. They are familiar with the industry. They do not mind participate in the IPO to hold for long.
People talk about the macro, right? That seems to be still what's missing in this rally. What assumptions are you making in terms of what stimulus could come this year? And is that going to be important at all?
We focus 4.8% real GDP growth, which will be mainly supported by strong exports. But besides that, we are also expecting the inflation to turn, especially PPI, to turn positive in the second half. So in 2026, compared with 2025, we do think naturally the economy could recover a little bit with inflation improvement. On the other hand, we do think the fiscal will be a little bit more expansionary. Last year, we forecast the augmented fiscal deficit to be 11% of the GDP. This year, we forecast 12.2, slightly higher. So we do think the government will continue do more policy stimulus, especially on consumption side. It is important. So some subsidies could continue to be provided to like consumer services, for example, travel, some leisure activities, at the same time to household with second child, for example. So we do think it will have some boost, but we are not expecting a dramatic change there. The high growth potential may still come from AI-related part, but for consumption, we do expect some gradual recovery from the bottom.
No earnings, no gains. What's the earnings projection this year?
We focus 14% earnings growth for MSCI China for both this year and next year because of the AI driver, going global trend, as well as anti-evolution policies. So all these three drivers will contribute 6%.
Okay, Si Fu, our China portfolio strategist at Goldman Sachs, joining us there as well. 100 for MSCI China. If you're a subscriber and want to rewatch that interview, you can watch it through our TV function, TV Go. You can also become part of the conversation by sending us instant messages. If you have questions for Si Fu or our other guests throughout the morning, let us know. Check it out at TV Go. We're just talking about 8 IPOs in Hong Kong, and certainly Goldman's call on what could happen this year. They think it's going to be a steady pipeline. And that was the same with Hong Kong Exchange's CEO, Bonnie Chan, saying the year has started strongly with IPOs raising about $4 billion in the first 3 weeks.
Speaking to us at Davos, Bonnie Chan also told us investor demand for diversification amid tariff uncertainties has benefited China and also the rest of the region.
Looking into 2026, early days, but let me give you a report. So year to date, we've actually completed already 11 IPOs, and we're in the third week of the new year, raising a total of $4 billion. The pipeline is solid.
What is solid? 400?
350 plus, yeah. We do have confidential filings for certain categories of listing applicants. So the public filings that you see, it does not show you the full number. But it is a very big pipeline with very high quality companies. So a lot of positive things to look forward to.
Mega IPOs. I think you had 4 out of the top 10 last year.
That's right.
Are you looking at more mega IPOs this year? And might there be more non-Asian companies wanting to list on the Hong Kong Exchange?
Right. Yes. So last year we did 4 out of the 10 biggest IPOs in the world. So that was very good. This year, looking in the pipeline, we certainly have a lot of deals which are above $1 billion in terms of offering size. But I feel that this is not just unique to Hong Kong for a change. I'm looking at the other markets, and it seems like there's a big comeback for fundraising through IPOs. And so I think this will be a busy year for everyone.
So you can do better than 4 in terms of mega IPOs?
I can do a lot more. Whether or not they're top 10, I think will depend on what the other markets are going to turn out.
There seems to be a Sell America theme. Is that benefiting Hong Kong in any way in the IPO space in terms of money flowing from the US to Asia, particularly in Hong Kong?
Yeah. This is my 3rd day at Davos, and I would say that the one word that constantly come up in all the dialogue, it's the word diversification. So I think, you reported it a lot. The last few years we did see maybe global capital gravitating towards the U.S. And concentrated really in a few stocks. But given all the volatility, uncertainty, unpredictability, investors generally just want to seek more ways to diversify. And I guess once sort of that mindset shift happens, they started looking around and then they realized, well, actually, you know what? Asia, China, a lot to offer, and that's why I do feel that this trend or this desire to diversify is playing to our advantage. Now, to your question about whether or not we will be able to attract sort of a more diverse set of issuers, besides just Chinese mainland companies, the answer is certainly yes. we see a lot of pretty solid green shoots already emerging in 2025. So we have listed companies, for example, last year from Thailand, from Indonesia, from Kazakhstan. We even had a company which business is basically in Africa, right? And I do feel that we're going to see a lot more.
That was the CEO of the Exchange of Corresponding, Chan, with Haas at this big get-together somewhere in Switzerland, very cold. Subscribers can get an insider's guide to the money and people shaking up the finance hub. Our newsletter is out for the week. It's out today, and I believe part of the newsletter was actually our chats with Paul Chan. Also, it has yesterday, so look out for that. That should be out anytime this morning. Scan the QR code, whip your phones out, take the selfie, and then take that, and then it's free. So feel free to subscribe. This is Bloomberg. Welcome back. You're watching The China Show. The CEO of private equity firm FountainVest Partners Asia says he is confident in the resilience of Chinese companies and consumers. Speaking to us at Davos, Frank Tang also told us China has become an attractive investment destination that's been driven by innovation.
I feel a lot more positive in the last 12 months than I felt, say, 3 years ago. I think overall the Chinese companies have gone through so many stress testing in the last 5-6 years. And the companies that we're working to now are definitely strong, resilient, and have adapted themselves.
We talk about slowing growth. We talk about geopolitical tensions escalating. Are some of those, factors likely to impact sentiment?
I think every year there's never a dull moment. There's always some news. We are still talking about trade war, geopolitics, as we talk about it during COVID, after COVID. But I think right now everybody felt life needs to go on, and every company just need to focus on what they can control. And that includes not only growing, the R&D, growing their innovation, understand the consumer market and do it better there, but also internal efficiency as well. So we spend a lot of time with our portfolio companies on internal efficiency improvement.
What are you seeing in terms of global LP appetite for, China-focused PEs? Is that improving?
Gradually. I would say it also, so 4 or 5 years ago, there's a question whether China is investable. And 2-3 years ago, a lot of our LPs started to come back to China to visit, to understand what's going on. And I think the mood is definitely improving. Also, it depends on which geographic region the LPs are coming from. And that may also affect how they view about the potential of investing further in this market.
But have you been surprised by, the reversal in sentiment from uninvestable to perhaps being quite attractive?
I think the innovation that's been happening in the last, or has been known to the world, has been quite impressive, right? And, last year, during this time in Davos, nobody saw DeepSeek was coming. And we saw the whole life science sector in China taking off. And those are just 2 examples. Also, I think the Chinese consumption, despite it's not growing as fast to contribute to the GDP growth, is still very resilient. There's a vast market. So we're very bullish about the Chinese consumption, for example, and we think there's just going to be more potential.
FountainVest Partners Asia Chairman and CEO Frank Tang there speaking to Hass in Davos. And some other world news this morning, we're checking, of course, Ontario Premier Doug Ford and automotive industry leaders are urging Canadians not to buy Chinese EVs. The provincial leader says a trade deal struck last week allowing China's entry into the local market puts jobs at risk. The deal also lets Chinese automakers assemble cars in Canada, and industry leaders say it could weaken the North American supply chain. Turkish competition authorities have reportedly raided Temu's office in Turkey. Reuters cites a spokesperson for the online retailer, which is owned by PDD, saying laptops and computers were taken. Turkey's state-run news agency quoted the government antitrust authority, saying the process should not be seen as a direct transition to an investigation.
All right, let's have a look at markets right now. Early on, it's chips that are playing the game that they did yesterday. We are coming off highs. On that, it's really, though, when you look at specifically the onshore names, I think we can talk about that later, in the CSI 300 really leading these gains. Apart from that, I mean, there's a lithium story. It's going to take me more than a few seconds to talk about that, so why don't we just sort of display some of these names, and, you know, we have another hour to talk about this, so that plus plenty more, including a deeper dive into FX coming through next. This is Bloomberg.
Welcome back to the China Show. Here's a look at the HSI half hour into the session. We are losing a bit of momentum, particularly when it comes to some of the tech names in the last few minutes as well. Perhaps Hong Kong just being overshadowed by what you're seeing in Korea right now, where we hit that political milestone, 5,000 for the Kospi as well. Really kind of driven by, of course, this whole AI chip hardware theme. So that continues to be an up arrow story here, given that, you know, the temperature around Greenland seems to have come down substantially in Davos, David.
Yeah, around the conversations, it's probably still very, very cold, which is actually very part of the conversation, right? So we were chatting, Yvonne and myself and Mark Cranfield off air just before we came on, right? If you told someone 24 months ago that things are going well because there's no war in Greenland, that sounds like a proper joke, right? This is the world we live in right now, where it is really had been a driver of markets today, and it's really given, I think, this flip the page, the markets an opportunity to focus on other drivers that were leading this rally away from geopolitics, right? So whether that's Disco and the earnings there, or the open AI story and the valuation there, and hence looking at 2% gains on the Nikkei all through down to the TAIEX index. To Yvonne's point, right, HS Tech is underperforming today. Kospi's 5,000. In fact, you know, another number for the Kospi, 3 trillion. That's now, the Korean stock market cap has crossed that milestone this week, in fact. So it's very close now to topping Germany and surpassing Germany in terms of market cap. On the hardware side of things, might not be a Hong Kong story. It is still a story that's rallying, and these names we see on the screens here, of course, continuing to rally. 7% on Lung San Technology. We were talking about this with Goldman Sachs, right? These are the new favorites.
The new favorites, they're still overweight A and H shares, but certainly they've leaned overweight when it comes to the IT and hardware space. That's the latest sort of reallocation that they've had really around the tech theme. Let's get the latest now on the market action with Mark Cranfield from our MLive team. He joins us from Singapore. So it seems like risk assets are a go here. Geopolitical tensions have eased a bit in Davos from what we heard from President Trump. What's standing out to you in his market rally now, Mark?
Well, the timing is very good. So you have a bit of a dial back on the tension around Greenland. Everyone feels happy about that. There's obviously relief, and we could see that first thing this morning as markets opened in Asia with the S&P futures and Nasdaq futures. And then at the same time, we get this report that OpenAI is seeking out funding from the Middle East, potentially $50 billion. Which could give it a company valuation around about the 800 billion mark. And everybody knows is what the worst kept secret in the world is that they would like to go to an IPO at some stage, sooner the better. Maybe they're going to be the first American company to have $1 trillion IPO. It's certainly heading that way. Anyway, the impact from that is it helps the already amount of euphoria that we have around the whole AI theme. So here we are. Big story. OpenAI has shown before that as their valuation goes up, it creates more of a good mood across the whole tech space in America and obviously in Asia as well. As a side effect, it's helping the Kospi because anybody who has an AI-related valuation is going to benefit if OpenAI goes even higher. So the whole thing is feeding on itself. It's giving another bit of fresh legs to the whole mood around tech and AI and all the things just before the earnings season as well. A very good timing from that point of view. We've got the big companies coming up in the next couple of weeks and then eventually Nvidia. So everything at the moment is looking pretty good. If you like tech at the beginning of the year, you're going to like it even more now that you hear where people are prepared to put valuations on these big companies.
Mark, just a question on the JGB market. I'm not watching that today. Can I afford not to watch that today? We need a break from the JGB market.
Yeah, you can take a one-day holiday, but tomorrow is the Bank of Japan decision. So I reckon you probably should put your eyes back on the screen tomorrow to see what's happening there. Of course, the decision itself, people expect no change from the Bank of Japan. But whichever way you look at it, the long end of the Japanese market, what they call the super long market, 20 years and longer, is really become dysfunctional. The differential in yields between different parts of the JGB curve is more extreme than anywhere across the G10 market. So in the case of, say, the UK market or treasuries or Germany, if there was a 20 basis points differential between on-the-run and off-the-run bonds, that would be pretty wide. At times recently in the JGB market, it has been 200 basis points difference between the benchmark bonds and the old bonds. That's really something you would expect in emerging markets, not in a G10 market, and especially one as big as Japan. So clearly something is going wrong in the whole functioning of the Japanese bond market. And it's the job of the central bank, ultimately, is their responsibility to bring order to a bond market. If we're going to get a surprise out of the Bank of Japan meeting tomorrow, it could be during the press conference that Governor Ueda will hint that the Bank of Japan has to increase its holdings of JGBs in the long. It's been cutting them for a long time, and it has a plan to continue to reduce its buying of Japanese bonds. It could be now the market is so disorderly, the Bank of Japan has to come back and stabilize it.
Mark, thank you. Fantastic. Mark Cranfield in Singapore for us, our MLive strategist there, and what to watch going into the BOJ decision, of course. Tomorrow, right, just a glance at FX markets, right? So we have three. There's the yen and the JGB market. Number two is this outperformance in the Aussie today. There we go. It's quite clear, 0.5%. Fantastic jobs report. There's this overlay of this parallel rally in the commodity market that's taking place. So 68 cents on the Aussie. And of course, on the Chinese currency separately, it's despite the dollar weakness that we've seen and leading into the weak strength of the currency, the fix was still on the weaker side of 7, and that spread between 7.00 and 19 and 6.96.18, which is the onshore spot. That is at about the widest since 2023. But yes, we can get to all of that in a moment. In fact, why don't we do it right now with Trang, FX and rate strategist at LGT Private Banking Asia Pacific, with us here on set. Good morning. Hi. I saw you nodding while we were talking with Mark Cranfield there along the Japanese currency in the JGB market. What are your thoughts and implications on the yen here?
Yeah, I mean, the JGB market is really severely dislocated. I mean, liquidity has evaporated. So, small move in flow can make, a sharp disproportional change in prices. So I wouldn't read too much into the pullback in yield yesterday. I think all depends on BOJ tomorrow. The market's going into this hoping that they will at least say something. The market is at a point where some form of policy intervention may be needed. But, if we walk away tomorrow and the BOJ doesn't announce anything new in terms of what they can do for the JGB market, then I would expect, the pressure to resume. From the FX side, though, I think short-term, our view on dollar-yen has changed. We think dollar-yen stay elevated. And so 155 to 160 is likely to be the range in the short term. However, I just don't think the FX market is a good way to express fiscal risk. It's all about JGB for now. In the FX market, upside is very capped by risk of, FX intervention. And the past patterns we have seen is that even though intervention has, significant but short-lived impact, it has been followed with BOJ hike in the past. So I do expect, from the BOJ, I'm not too sure on the JGB measure, but from the tone of monetary policy, the BOJ will sound hawkish. But again, the governor would go as far as signaling an imminent rate hike. That we'll have to wait and see.
I think Citi came out with a line saying we need at least 3 hikes, or at least telegraphed hikes from the BOJ for dollar-yen to meaningfully reverse. I mean, what are your projections on how hawkish they can be this year?
I think the market is still underpricing the terminal rate in Japan, and it's possible we need to look at the highs 1 or even 2% in terms of terminal rate. What? If fiscal expansion continues, if dollar yen stay elevated, surely that would be the directions of the BOJ rate. I mean, I would say though that when we look at dollar yen impact, right? For me, a turning point, a sustained turning point to stronger yen, perhaps it's not only the BOJ now. We also need the domestic sector to look more inwards. So more rotations back, from flow, from investment outward to investment back into, local market. And we see a bit of discussions on whether the GPIF would increase, domestic allocation. I mean, Japanese banks are still, holding very little JGB for now, and they could start buying more. Level of yields are certainly getting, attractive. So from a return perspective, there's a case for it. But, volatility is still too high. So what we need is some forms of, clarity in terms of fiscal policy. How this, tax cuts on, food items can be funded, and eventually some form of interventions from the MOF and the BOJ into the bond market as well to calm sentiment.
A lot of people are also talking about, speaking of a weak currency where intervention suddenly become a topic of conversation, is the South Korean currency, right?
Yeah.
So we're puzzled. Why is that currency so weak when the equity market is doing so strongly? And how are you viewing all the dynamics at work there on the Korean one?
It feels like the Korea equity discount has moved to the FX market instead. in a way. Yeah. In a way. I wouldn't say it's a discount for the FX market. Right now, it's more like a dollar premium that is still being priced. But I mean, from a dollar Korea perspective, I would say current level is attractive to me to look at dollar Korea downside. 12 months down, we look for 1,400. Okay. And we say that because we think the measures that have come out from the Korean authority are much more concrete than what we have heard from, Japan's side of things. So, for example, if we look at, potential change in hedging by NPS, that could bring in inflows of somewhere between $20 to $50 billion. We still have this WGBI bond index inclusion, another potential $50 billion, although we can discuss how much of that would be FX hedge. And then you have other measures as well when it comes to government tax exemption on, reshoring investment account and delay in terms of, investment pledge into the U.S. I think what is somewhat underappreciated is, the terms of trade boost to Korea from this, rally in semiconductor, in memory prices. Right now, in January and February, the current account is seasonally weak, and domestic outflow is seasonally strong. So that combination is bad for FX. But once we move away from that would be better.
Yeah, we were talking about what you're seeing across Asia. FX is quite. There's quite a bit of dispersion, right? When you have the likes of Korea, the weakness that we've seen, you have rupiah, the rupee at record lows. On the flip side of that, I mean, yen also is in that pack. On the other side, you have a very strong renminbi. Sing dollar, I guess, is in that camp as well. Yeah. What do you think is driving this sort of dispersion across Asia FX here right now? And can that continue?
I think it can, because we are all pricing in a bit of degree of domestic policy risk. So for the case of yen, obviously, I think, fiscal uncertainty extend even beyond the election. And in the case of, India is a repricing or a regime shift in terms of, central bank intervention stance, right? So before we get used to RBI severely suppressing volatility, but, we understand last year, 2025 was a year of reckoning for FX trader in INR. They're not there anymore in terms of vol suppression. Yeah. So that I think can continue.
You said your biggest conviction, I want to get is Aussie and gold. Let's start with gold. I mean, it seems like any sort of geopolitics, once things sort of calm down, gold does retreat. But you're saying there's still kind of a structural shift in strength in bullion right now. Yeah. What's driving that structural shift, you think?
We're very bullish on gold. So we have a 5,000 forecast for this year. It's closing into our levels. Any pullback in gold, if, as you said, geopolitical tensions ease, Greenland temperature goes down, it's opportunity to buy gold. And we're structurally bullish because central banks continue to be very supportive for that market. And so let me give you a bit of context. So our forecast implies about 10 to 15% upside in gold. And we arrive at that number looking at demand from central banks and ETF. For central bank, we assume basically the same pace of purchase as last year, about 800 to 900 tons.
Okay.
For ETF buyer, we assume only 200. In the first 3 quarters of 2025, they bought 600 tons. So our assumption is quite conservative, and that already in our model already get us to 5,000. So any additional buying by ETF buyers because of geopolitics, because of the need to diversify away from the dollar, that will support upside in gold.
Scarcity of uncorrelated assets.
Well, I have a follow-up there. So what does that have to do with the Aussie dollar?
It's slightly, it's the same theme, but slightly separate. The same theme in the sense that we still see a strong demand to diversify away from the dollar. Despite the fact that geopolitical risk has come down a bit, overnight. But Tuesday, that triple down day when you have U.S. Treasury, U.S. equities and dollar coming down at the same time, it still served to me as a warning sign for dollar bulls. And when you look at Aussie dollar, it's a year where the high carry status for Aussie is finally restored. And I think that has important implication not only for investment but also for FX hedging decision, because for the Australia super funds, hedging Aussie upside is now zero cost in the forward market. And if you're looking at the breakdown of dollar correlations, hedging is a much stronger proposition.
That's great. Trang, thank you so much. FX and rate specialist at LGT Private Banking for APAC. Still ahead on the China Show, the parent of PDD and Temu get a modest fine for failing to file tax documents on time. We're going to talk about Pinduoduo remain the subject of a wider government investigation. More on that coming up. This is Bloomberg. Some corporate news this morning. China's Zhipu is limiting access to its coding assistant after strong demand for a new AI model siphoned off computing resources. The company, also known as ZAI, says from Friday it will start taking only 20% of its current daily news subscriptions. The Beijing-based developer had a high-profile IPO in Hong Kong this month and is among a group of Chinese contenders squaring off with Anthropic and OpenAI. Chinese authorities have fined PDD Holdings $14,000 for failing to file essential tax documents on time. The modest penalty comes with the company still the target of a wider investigation into its business and tax practices. In December, its employees exchanged blows with regulators looking into alleged misconduct, including fraudulent deliveries.
Well, speaking of, let's talk about the other story we've been tracking. So Bloomberg Intelligence sees PDD, that fine that was levied, I think the news dropped yesterday, signals a need for tighter controls, not an overhaul. Catherine Lim joins us from Singapore, a senior analyst there. Catherine, why do you see it more as more about governance and discipline than a sort of an escalation as far as the regulatory regime is concerned?
Right. Firstly, let's take a look at the numbers. It's 0.02% of the company's revenue versus if we take a step back, back in the 2020 to 2022, when we had major structural reformatory penalties for Tencent, Alibaba, Meituan, that was 3 to 4%. So really the numbers tells it all that, what PDD has done really, it's a procedural, slippage that has happened and they need to tighten controls of it. It's not really to say that they need to majorly overhaul their business.
Okay. How do you think investors should interpret this then?
Right. Again, really, a few things that has materialized over the last couple of months as we continue to see the government issues the framework for tighter, rules, how operations should be managed. I think the key difference that has come through is that, they are tightening the specific rules and guidelines to how platforms should be operating in the environment whereby the Chinese consumers are now very reliant on these platforms for their day-to-day, needs as well as services. So, again, I would say that continue to actually see more of these, whether it's, scrutiny by the government on the platforms, and I don't think that PDD will be the only one. The key message for a lot of these platforms really is that they need to step up their government, they need to be compliant to rules that's out there. And I do think that, most of the platforms that we talk about, whether it's Alibaba, Meituan, and even PDD, as they put in a new CFO, made some leadership changes, I think, they are in the right direction.
All right, Catherine, thank you. Catherine Lim there, our Bloomberg Intelligence senior analyst. Speaking of the right direction, we're watching stocks of New World this morning, and Bloomberg has been told that the firm is racing to offload at least one asset by the end of June to meet its self-imposed $3.5 billion sales target and generate positive cash flow. Let's bring in our Asia credit reporter, Trista Xinli Luo. She's here with us right now. What do we know at this point of what assets they could sell?
Yeah, so they have some potential candidate here, and as we reported earlier about, the Chang's family have the high-profile Rosewood Hotel Group, that could be one, and also the K11 Ardmore, and we have to mention the 11 Skies, which is a massive shopping mall project, and New World has invested over 20 billion Hong Kong dollar in that project. But so far, all the, discussion and progress has been slow, so we need to wait and see more about how they're gonna, fast-track those transactions. But the company did tell some investor that they aim to dispose one of the major assets by end of June.
Are we past peak pessimism around New World?
I will say so. As we can see from the bond price and the equity price recently, we have seen strong rally in the new year. And for the bond rally, add to the strong gain from over the last year, and some of its bond actually traded above 75 cents on the dollar, which is we're saying that it's out of the distressed territory. And for the stock, it raised I think 40% last year, and it has risen, another 25% this year. So from this, stock move, and we can see there are growing investor confidence on this company. But there have been still a lot of questions along about long term how they're gonna structure, its financial and how to develop its business. But I think in the near term, definitely investors are less concerned about this name.
Okay, Trista, fantastic. Thank you so much. The latest there on New World and the timeline given by the company. Well, not given by the company. It's own timeline, our understanding of when it wants to dispose of that. And analysts are also chiming in.
I think JP Morgan had that line this week about, they're thinking even when it comes to New World, upgraded to neutral from underweight, and they're saying maybe the worst is behind us, right? The biggest investor fears have largely materialized here right now, and the upcoming results may actually start to see marginal improvement. The same goes for, of course, the rest of the property space, according to Carl Chan and his team, that perhaps you have seen the bottom for some of these developers here, and really you're going to see that in this earnings season so far.
Our estimates for earnings based on previous releases is early March, about March 2, just maybe around that time. Watch it very closely.
And they're focusing on specific names, right? CK Asset, Sino, Link REIT. Those are the ones to watch. But the New World thing, I think, is quite interesting as well. That change in the rating overall. So that's one thing to watch. We have more coming up. This is Bloomberg.
Pantoro Gold. One of the things we're tracking here today. Well, here's the thing, right? So before this gold rally got started, you were juggling just the usual names, and everything else that's come in, ETF buying, central bank buying, retail buying specifically, the actual stuff, jewelry, silver, has really broadened the investment universe. But as you can see, it's just a cross-section of some of the gold plays declining today given the declines we've seen in gold prices, today at least.
Yeah, the geopolitics are looking a little bit better, so certainly that is seeing the safe haven plays come off here today here. Watching CSSC Hong Kong shipping as well. Convertible bond issuance plan, their shares are down some 7%. This is Bloomberg.
I think that what happened in Japan is a very important message to the House and to the Senate. You need to get our fiscal house in order.
All right, get your fiscal house in order. That's a message from Ken Griffin there from Citadel. Speaking in Davos here about the week that we had when it comes to Japanese JGBs, right? And yeah, today we can rest a bit easier today, and given the volatility has subsided. But then again, what's tomorrow, Dave?
Oh no, it's BOJ Day.
Japan. Yeah,
it's BOJ Day.
So we'll see how hawkish, Ueda is going to be at the presser and the like. They're largely going to not do anything, but really it's all about the messaging, right? Just given the volatility that we've seen in JGBs, given the weakness we continue to see in dollar yen, we're at 158 levels here this morning. But equity markets are still cheering.
We're doing okay. Disco is a very good example. SoftBank, in fact, the headline just crossing right now up as much as 10%, the most in about 6 weeks or so going into the close, right? And, the BOJ probably will, I don't know if they're going to chime in on it, right? But a big part of why yields are backing up and the underlying demand isn't there is because they were the biggest buyer of this market up until recently. And they stepped back, and people were questioning if they step back, who is going to be the backer of the JGB market, which I think they've, up until recently, right? They've not really monopolized, but they've dominated the trade. I think we had a story years back. There was one day where not a single trade actually took place. I forget which tenor it was, but that just goes to show really how times have changed. But yes, here we are with higher yields.
Yeah, I think Trang just said it very eloquently from LGT just now, right? If you're going to express all these concerns about fiscal, or sustainability or whatever, it's going to be in the bond market.
Not in the currency market.
Not so much in the currency market. So that's a good way to differentiate it, at least for now. And the equity market still seems to be firing up here this morning. But yeah, when you talk about Japan, really, it has sparked a lot of questions globally on what to do with bonds overall. And really that safe haven sort of status seems to be kind of, I don't know, eroding somewhat, continually. Yeah. And people still say, as Ken Griffin mentioned, right, does this spell trouble for U.S. Treasuries too?
Yeah, it's hard to imagine a world where it's just the JGB market and nothing else, especially with the dislocation we had on Tuesday where, because that happened, Treasuries and the equity market ran alongside. And just on that note that Yvonne was just pointing out, right, you have the world's biggest government bond markets, whether it's U.S. or Japan or U.S. to Japan, are not suddenly prone to these sudden meltdowns. Shuli Ren, our Bloomberg Opinion columnist, is here with us to discuss this exactly. And these long-time investors, Shuli, in Japan, are heading for the exit. But new buyers, what about them? Where are they coming from? Are there new buyers in this market?
Well, there are some new buyers, and it turned out they are foreigners who have very strong views about how Japan's fiscal health should be looking like. So what we are seeing, especially in the ultra-long market, and the Bloomberg terminal has data on that, the monthly data, what we are seeing is domestic insurers, they have been selling because they no longer need to go to the ultra-long end to earn yield to feed their policymakers, right? So they're going to the more liquid 20-year. So domestic players are selling, but the foreigners have been buying because the yield has come up. So what happened Tuesday is that when the sell-off started, some basically liquidated some of their treasury yields to buy Japanese government bonds to buy on dip, right? That spilled over from Tokyo all the way to New York. And then also there is the whole idea about risk parity trades. Once you see volatility of bonds coming up, some macro funds, they have to cut down the risk exposure, and they have to sell bonds everywhere. And also with stocks, right? Big tech has a lot of liquidity. So if you want to cover your losses, you want to sell some big tech to cover your losses. So the fact that the foreigners are coming into the Japanese government bond market is going to create more volatility ahead.
And we saw this week with Greenland, right? That people are starting to view U.S. Treasuries as almost being weaponized in this whole geopolitical game, right? Are European investors going to offload their U.S. Treasuries, for example? On the flip side, some say no, there is no alternative to the U.S. Treasury market. So do you think U.S. Treasuries are still a buy?
Well, it's being debated. Last year, Morgan Stanley came up with a so-called 60-20-20 strategy. Traditionally, we talk about 60-40, 60% stocks, 40% bonds, because bonds provide a good cushion when stocks fall, right? But 2022 turned out to be a very bad year for 60-40 strategy. So Morgan Stanley basically talked about, 60% stocks, 20% bonds, and 20% on gold. And what we're seeing was that whenever there was this kind of geopolitical tension where treasuries are used as weapons, right? Like the gold price comes up. So there is a lot of tension. Also, the total returns for U.S. treasuries have not been good. So if you're a foreign government trying to shore up your reserves, it's a good question whether you want to hold treasuries.
Right. Julie, thank you. Julie Ren there, our Bloomberg opinion columnist. Interestingly, we heard from some of these Japanese banks themselves. When Mizuho, the banking giant, remains optimistic about Tokyo's fiscal stance despite this week's worried signals from the bond markets. Speaking in Davos, President and CEO Masahiro Kihara also reacted to the finance minister telling us the government's budget plan is not expansionary.
Japanese budget, fiscal policy has been improving, number one. Mindset of the Japanese corporates has been improving, which means that you can expand the budget, right? And so I would say that, and also many figures are improving. So I would say what Katayama-san has said is right, but she constantly has to send a message that, they will be diligent on this.
The market's obviously not buying it because yields are surging. 30-year yields higher than bonds. Might that be a contagion effect? Might we feel the spillover?
It might be, but I think this discussion has to also come from what will be the terminal rate at the end of the day, right? And
what should be the terminal rate? What is the terminal rate?
You want to talk about the terminal rate? Okay. So I think what is happening right now is that BOJ has changed their stance moving into this year, I think. So previously, I was thinking that the terminal rate might be the lower end of 1%. Based on the fact that Ueda-san is setting out the market that the current interest rate is extremely low, and also that he reiterates that he will raise rates as long as he sees development in the economy, inflation on the path. So I would say, at the minimum, 1.5% terminal rate. I think we can see that. It might be a little bit more. And then going back to your JGB question, historically, the difference between 10-year JGB terminal rate somewhere around 70 to 100 basis points. So if the market is already pricing in 1.5 terminal rate, it's 2.3 right now, JGB 10. I think it's fine. That's my call.
In terms of capital repatriation, it's looking pretty attractive. Enough for that repatriation to happen in a significant way.
You mean what you're
from the U.S. back to Japan, treasuries to?
You mean those dividend coming back to Japan or something like that? I don't see a lot of that probably. That's not happening. If that happens a little bit, I think that will the yen might be go to the 155 or so, but I don't see that much.
Let's talk about the yen. The weakness continues. Should the BOJ intervene, raise rates, perhaps 3 times, as some people have suggested, to give support?
I would say you are right. So, if the terminal rate should be 1.5, there's another 3 times, right? So I think they should do. Maybe they can do 1 time 50 basis point. I won't. I can expect that too. I think I kind of.
Do you see the first move of the 3 being before June, July?
I would say the next opportunity would be April. So he can see how the corporate CEOs will react in reality to wage increase. And if he confirms that there is a significant wage increase, I think that he can confirm that in somewhere around March, April. April can be the case.
And if the BOJ does move then, how much support, what yen level do you think we will see?
Yeah, I would say somewhere, the range will be somewhere between 145 to 155. Yeah. The market is already pricing in 3 times already, probably. That's what I think, yeah.
How are you assessing the outlook for your business?
I think, so even last year we talked about this, but we are concentrating our business into 4 areas. And those areas are doing fine. Those are mass retail in Japan, asset management, wealth management in Japan, supporting the growth of Japanese corporates, and our global CI business. And we have seen a lot of significant progress in many areas. For example, in the global CIB business, we purchased Green Hill is fully integrated already. We purchased a European firm called Augusta, and we purchased an Indian firm called Avendus. And these firms will be the catalyst for our global collaboration around the regions. And this will be our next growth part. And last year I think I said that our target will be somewhere around, for fiscal year 27, after-tax profit 1.1 trillion, ROE 10%, and then PBR somewhere around 1.5. I think we're very close to that already. So we're working on revising that target for fiscal year 28, and our gut feeling is that exclusive of the rate hikes that can be expected, after tax 1.5, range of 1.4 to 1.5 trillion, ROE 12%, PBR maybe 1.75 to 2%. So that's
pretty ambitious.
Yeah, you have to be ambitious.
Let's talk about your European business.
Yes.
You did talk about how restructuring is done. Now you're going to be on the offensive.
Yeah.
What does that mean necessarily?
Yeah. So we have been concentrating on optimizing our organizational structure, also our return. From an organizational perspective, we moved into a universal banking structure we completed that last year. So that part is done. And we reduced certain branches to get more effectiveness. On the return side, we reduced low return assets. We exited from certain relationship that doesn't produce the right return for us. So I think it's about our time to go out in the market, chase for opportunities. And I think that the opportunities will come from leveraging on our U.S. capabilities, collaboration among the regions, and also Japanese nexus, and also Middle East will be also very interesting. Introducing investment to that region or introducing investment flows out of that region will be very interesting.
Yeah, there we go. They covered everything with Haas. That was the Mizuho Financial Group President and CEO Masahiro Kihara at Davos with us there. If you are one of our Bloomberg clients and you want to rewatch that specific interview, you can turn to your TV function, interactive TV function on your terminal. That is TV Go. You can scroll a little bit back, it takes you to this. You can scroll even further, it takes you to all the other interviews that we did there out of Davos so far. This is Bloomberg.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security. Well, the deal is going to be put out pretty soon, and we'll see. It's right now a little bit in progress, but pretty far along. It gets us everything we needed to get. It's the ultimate long-term deal, and I think it puts everybody in a really good position, especially as it pertains to security and minerals and everything else.
We probably won't get anything unless I decide to use excessive strength and force, where we would be, frankly, unstoppable. But I won't do that. Okay? Now everyone's saying, oh, good. That's probably the biggest statement I made, because people thought I would use force. I don't have to use force. I don't want to use force. I won't use force. I want Greenland for security. I don't want it for anything else. We have so much rare earth. We don't know what to do with it. We don't need it for anything else. And in terms of Greenland, you have to go 25 feet down through ice to get it. It's not something that a lot of people are going to do or want to do. No, this is security we're talking about. You can say yes, and we will be very appreciative, or you can say no, and we will remember. A strong and secure America means a strong NATO.
Yep, a good highlight there of really the best and what we heard from the president there in Davos and about Greenland, and that really is why we are seeing markets, rallying in a sense of relief here this morning that they have avoided at least tariffs with the EU. Meanwhile, U.S. National Economic Council Director Kevin Hassett says President Trump's tariffs have been positively disruptive. Speaking to Bloomberg, Hassett also said he does not believe those levies are pushing U.S. allies closer to China.
President Trump is disrupting an order that needs to be disrupted, and I think that markets are celebrating because of that.
Do you think that tariff uncertainty, though, we got a whiff of Liberation Day this week because of what was going on with Greenland, do you think we are past the most peak moment of tariff uncertainty for financial markets, for consumers, and for other countries?
Well, I think the tariffs have surprised a lot of mainstream economists. I used to be one of those guys, at least on the tariff front, where I've been surprised, especially.
Now you're a true believer.
It's just astonishing that everything that's in the models that we were taught when I was in grad school just turned out not to be true. And we have, I think, a strong understanding economically of why that is. It's basically that if we have a trade deficit with China forever and ever, then by definition, they're basically dumping into the U.S. with inelastic supply. And so if we put a tariff on them, then they bear the tariff. And the same thing is true for Europe. If we have a big trade deficit with them for a long time, then they basically cut their prices in order to maintain market share in the U.S. And I think the question is, the interesting question that I've been puzzling over and talking to some of my mainstream economist friends is, why is this so positively disruptive? Has President Trump's agenda been so positively disruptive for Europe? And I think that one of the things is that he's made them lift their game in terms of restoring the global order by increasing defense spending. But also, remember, it used to be that we were always talking about zombie companies in Europe. We've got to stop doing that, haven't we? And I kind of wonder if the competition that's created by the tariff and the tariff uncertainty hasn't been a real shot in the arm for the European economy.
We've heard a lot of people on Bloomberg talk about that. Actually, what Trump is pushing Europe to do is to do what's good for them.
Right.
But are you concerned about any of these unintended consequences? We saw Spain go over and have a very cozy relationship with China last year. Prime Minister Mark Carney just went over to China. Then he came here to Davos and talked about how the world order that we know is dead. And if you are a middle country and you're at the table, you're going to get eaten. Is there potentially this consequence where we push our allies closer to China, which is the U.S.'s biggest adversary?
No, I don't think that's happening at all. And I think that what is happening is that people are learning, indeed the people here at Davos, that's one reason why we're here to spread the news, is that we've got all this analysis that says that Trump's plan is working. It's working both for the U.S. economy and for the global economy. And I think that people in the end, they look at their wallets, they see how it's going. And in the United States, they're going to see a couple quarters of 5% growth and booming markets, booming wages. And if they see that everywhere else, then I think that it'll have a big political effect. I think the people who make the most noise attacking President Trump aren't necessarily speaking for their countries. They're speaking for their very, very liberal policies. You've seen President Trump call some of them out the last few days.
Yeah, there we go. That was Kevin Hassett with our Anne-Marie at Davos. And in fact, some of our Bloomberg clients, of course, you can check out more on updates coming out of our coverage there on the terminal and some of the takeaways at the end of the day, but you can follow all the action and developments throughout the coming day or so. Check it out. See you live you go. This is Bloomberg.
Well, BHP CEO Mike Henry has praised the Trump administration for its support of the mining industry. Speaking exclusively to us in Davos, Henry said the Resolution copper project in Arizona could meet 25% of U.S. demand.
But I can't speak highly enough of the support that we've seen from the administration. So the administration, be it Secretary Burgum, Secretary Wright, President Trump, have been very keen to get more mining and processing going in the U.S. because they understand the importance of critical mineral supply chain resilience. And of course, it would support the U.S. economy and specifically the Arizona economy as well. So we're all ready to go, but we have to let the legal process take its course.
How long has it taken? More than 10 years?
It's taken a long time.
Yeah, I mean, I guess can you just quickly put a bow on that and say, is it going to be expedited in a serious way? Could we see it in the next, say, year or two?
It's very hard to predict. We were almost there a few months ago, but it's been held up for a little bit longer. We remain optimistic that it will ultimately be a project that goes ahead. It could supply 25% of the U.S.'s copper demand for decades. So this is a pretty significant project, one of the best undeveloped copper deposits globally. And from a BHP perspective, it's but one of 4 major copper growth projects in the portfolio.
You sound like the administration has been really helping you and your business. At the same time, there's potentially more tariffs coming down the pipeline when it comes from this administration. How do you navigate that environment?
So, look, it is a more volatile, uncertain environment than it has been in the past. But from a mining sector perspective, 5 years ago, it would have been hard to get airtime for mining companies globally. There wasn't a lot of interest in mining as a sector. If anything, there was a lot of pushback on mining, where I think there's been a growing awareness of just how important metals and minerals are to the world. Continued economic growth, economic well-being of billions, energy transition, and the digital transformation. And so broad brush support now that we're seeing, certain strong support in the U.S., but support in other countries as well. That's something we should all welcome. But of course, there's going to be uncertainty that we need to navigate along the way. The tariffs aren't impacting BHP directly in any big way because we only have about 3% of our revenue in the U.S. Currently, but it's something we do keep an eye on.
There we go, the BHP boss speaking with our colleagues on Bloomberg Surveillance, and just really staying on theme here in the mining space. And really one area of the market in China specifically we're tracking within that is the lithium market. If you've taken a look, if you had a look, even a glance at some of the wild swings that we've seen this week, does underscore why I think it was the exchange that had to intervene. I think it's the sixth time in Guangzhou since December 19, given all the price swings we've seen there.
Yeah, so we basically saw limit up for the futures there earlier this week as well. So, this is a market that's not immune to these, extreme swings, but certainly there's just such a demand, or at least people are projecting a huge demand when it comes to ballooning demand for batteries, right? And really there's a lot of anxiety over supply. So we've actually seen prices double since the start of November here. So the regulators are trying to cool this down a bit once again.
Yeah, and this is an interesting conversation because just as recently as 2 years ago, we were trading at much higher on prices here. They've collapsed, and from that bottom have had this acceleration to where we are. That we'll continue to track this very closely. Other things we're going to is the IT hardware rally. A very quick update on that before we just wrap up the show. 8% on some names. The benchmark, though, is a quarter of 1%, which is similar to what we're seeing, broadly speaking, on benchmarks in China. As you can see, we're flat across most. The rest of the region, including European futures, are doing well, actually.
Yep, so it looks like, there's some relief when it comes to Greenland. The Kospi still breaking above and holding around that 5,000 psychological level here as well. So Korea, Taiwan really outperforming here today. That's it for us here in the China Show. This is Bloomberg.